Oh, good day, everybody. Let's talk about beans today. I usually talk about corn, but we also grow beans, and they're interesting. And as of late, I think after last night's move higher, and I'm sure you're all well aware of that, we're up about 2.5% here as I go to tape, 23 odd cents. So that's nothing to laugh at, right? And I'll talk about fundamentals and technicals. Let's first kick off with some of the technicals. We made it through the 62% recovery from the bottom or from the lows, right? Technicians love to look at that 38% recovery or a 50% recovery or 62% recovery. Those are big levels that the technicians will like to follow. And I think that we got through that 62% last night. And 924 and three quarters was yesterday's high, and it was last night's low. So it looks like we jumped a dime on some decent short covering and some worries maybe about this weather. So if you are a technician, and I am not, I'm a fundamentalist, but I put these out there because, again, I can't stress enough, you have to know both of those schools of thought to kind of get a rounded view, a worldly view of the trade. 935 was hit last night. If we settle above 935, that's going to prove and attract more strength to the market, most likely. And then the technicians will be looking at other technical levels higher, which would be around 950, then 955 will be on their technical map. Now, it's not necessarily on mine, but below you'll have some levels below. 907, 910 will also be on their technical map below. So if you're bears, that's going to be a level you'll see some attracted activity. And if you're a bull, those other two higher levels of 950 and 955 will also be important levels of activity. So pick your poison about which way you think things are going, but that's the map that technically kind of frames it out for us, and we have an idea about what the short-term levels are and what could be important for these technicians. Other than the fact that we have some fundamental news out there, which will be hot and dry. We saw some degradation in the crop conditions overnight, or not overnight, but this week, 1%. Nothing major, but it's not going to get, I don't think, any better. I've been out and seen some of these bean fields, and we've definitely taken the top off. I can say that for sure. At least that's my anecdotal evidence. And that's, like I said, from Northwest Illinois down to, say, central Indiana. So we'll keep an eye on things, but things are definitely dry, and I think that's adding fuel to the fire when you have these technical levels line up with these fundamental things. That's what you get. You get a 2.5% move from one day to the next, which is pretty strong. So finally, think about it. We've rallied, as of coming to tape this morning, we were rallied over $1 off our lows. It's now more considerably even higher than that. If you're a producer, you got to start thinking about putting that risk down on paper and use the exchange for what it's for, right? So if you want to make some cash sales, but you want to stay in the market, you can buy some calls to stay in the market. Those are the types of things you need to be doing now, because we don't need woulda, coulda, shouldas and going into harvest. Yes, things are looking stronger. Fundamentally and technically, they're lining up, but that doesn't mean you don't want to have a plan on paper, stick to it. And I think that's going to be bode you well over the next 10 years rather than the next 10 days. Something to keep in mind about business plans. So that's the map right now as I see it. We'll see if that takes place or forms up a little bit more clearly the next time we get together.